family. We are here live and our session in YouTube. And thank you for being part of Berakah Investment Group, the big money group. Right now, we have, before we continue talking, remember we are not a financial advisor. We are not collecting money from nobody. What we do, we teach the people, the community, how to behave when the market and doing analysis in the market and all that kind of thing. So I will explain to you this position right here was exactly what we expecting and why we decide to here to go down. And we expecting that they collect this sell side right here, all this sell side right here, and also this one right here. We expecting the market to come here and collect this sell side right here. Okay, that's what we're expecting. Why we do that? Well, first we got the open range right here. Open range down, shoot up, shoot here, shoot up, shoot here, shoot here, shoot here, and shoot here. From there, we got the absentee. What is absentee? First, you have to know where you're looking for the absentee. Because if you focus on absentee everywhere, it's gonna be like everywhere. Boom, 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 absentee, absentee, absentee. But where is specific the place where you're exactly looking for the absentee? Well, if we go in here, we're going 15-minute. We're gonna see right here, we got this fair value gap right here. We got this fair value gap here, and we got this one right here. Right here, you had the what was we call it buy side. Here was buy side. I got buy side here. Also, when they did that, we in this candle came here like crazy. What else you see? I see the market touch this little touch right here. Look, the market just did a little touch right here. Right here. You see just a little touch it to this fair value gap here. Not even went to the middle. So also before the market like it will move in all this and then in 1 minute, what we see in 1 minute, we were waiting for S&T right here. Also, then after S&T, which is S&T is for sure liquidity take, buy side liquidity take right here, buy side liquidity take right here. This buy side is holding there. This buy side. But what we see right here the market came, made the SMT, the M market trade shift, pull back to the market pull back. We got the SMT from the fair value gap, this fair value gap, and this one is specific. Create SMT. First of all, let's talk about the SMT. SMT, you look for SMT between three pairs. You're looking for the, you can go even for the Dow Jones, the Dow, they call it the Dow, right here, which is the signal is the symbol is MYMZ 0%, the contract for December. So look at right here what we have. You see 46, look at 47. Oh, let's put this one. 1023 to 1058. We see that the price went down. Beside in Nasdaq from 1023 to 1053, I think on 58 right here. Yeah, 58. Look where's, let's put this one, 53, because that's exactly what the MT. So let's go to the 23. It doesn't. I don't see exactly the exactly candles. But if you go like if 47 is 47 to 23. Let's see in Nasdaq which one is the candle. We got here 53. Let's put like this: 47 to 53. 47 right here, 53. You see? 53. If we put 53, we're gonna put it more down. Right here. Right here. You see how the price, this is S&T. Is you can see it, S&T, like going down. Which is Nasdaq, it went up. You know what I mean? And Nasdaq went up. So seeing this movement right here, you take the trade when the market should shift from the fair value gap or OTE price, and you're selling for the next liquidity right here. See, you got liquidity right here. Right now, I see the market movement. It's moving in doing this placement right here after listen to this, after the market take this liquidity. This is sell side liquidity. We prefer the market to go to take those liquidity too. But what I see here, the market did a replacement here. That is model 22. It's not total soup because total soup need to go eat all this. So that's a model 22 right here. So in the model 22, we learn to take a trade specific right here to buy.
Order filled.
Right here, and the market going to show up after they take the liquidity. That's like what we've been learning. Then we place the stop loss below of the candle. Hold on. Put a stop loss in.
Order submitted.
Okay, we place the stop loss in the candle, and then we take the profit all the way there, the top. So first of all, we take profit all the way there at the top. Sell side limit.
Order submitted.
We have to see if the candle being like crazy. So we're gonna take this away. Let's see if we got the 2% first before we take this away. Let's see, we got the 2%. $293. Yeah, we got a 2% from here to here. That was a 2% right here. Okay, so we take this away. Well, let's put it as a high model. So what we see here, we got S&T. Let's see if we find S&T also here. Okay, this is what 1107 to 1040, 1039. $11.07, 1039, 1039. There you go, 1039, 1107. We don't have S&T and this one. Let's see if we got S&T and ES. 39. No, we don't have a S&T. And this one we don't have S&T. So let's see any fair value gap around here. So the market gonna go down. Okay, let's see which fair value gap the market gonna be rejecting. Either this one or this one. Pay attention when the stop loss. If the market If the market don't respect this fair value gap, definitely we're going off the trade. We're gonna take it off. Let's see. You got inverted fair value gap right here, which is have been respecting IFBG. Pay attention to that. He's been respecting here. There you go. Pay attention. Pay attention. Okay. I love to place my own fair value gap too, because then I see the middle. If the price don't respect the middle, definitely I'm off the trade. So right here we see the market like touching and respect the middle. Let's take this Fibonacci away. Let's see what's going on here. I love the buyers. The buyer because the buyer in 4 hour is up. You know what I mean? The buy in 4 hours is up, uptrend. I'm gonna explain to you what's going on with that. Give me a second. Okay. It didn't. It didn't. It didn't. It didn't. It didn't. It didn't. We out. Yo, we out. We out of the trade.
Order filled.
Explain to you why. Because they didn't expect that thing there. Okay? So we continue with the position down to continue eating the liquidity here, here, sell side liquidity. You see? So we continue doing this, eating those positions. So we're gonna pull back. So we continue to take the same position from the fair value gap when SMT from the 15 minute. You know what I mean? So right here, you already have the 2% right here. You saw it right here in this position. You got it? You saw the 2% from here when the S&T market structure shift, 2%, boom, right here. And if you want, like I say, see how he respect this fair value gap here, the inverted fair value gap specific. He went there and respected. And we say the market can be potential eating here, and eating here. This is a sell side. I don't get why the sell side has this color. Let's change these colors. I don't want those colors. I want buy side. I want to be red. And sell side, sorry, I want to be this. Also, let me see this. I see liquidity board here. Let me see if we can get those things. Oh, I think that's That is the, yeah, this right here. Oh, that's something different. I think it is. Anyway, so right there you see, I think in the trade for the day for the session before 12, it was this right here, SMT, from the 15-minute rejection, 15-minute rejection from the fair value gap here. No, this one, this fair value gap here. So that's exactly what we expect in the market to go eat. Let's put like that first 15 minutes. The market to go eat this, all this liquidity right here, this liquidity right here, this, even this one. That is what I see. He gonna stop. Where he gonna stop? Listen to this. He going to stop in a fair value gap for higher time frame. It's gonna be 15-minute fair value gap, which can be this one. It can be this one right here. Right here, we got a fair value gap right here. It can be this one in the bottom. You got it? So that's like what we see. Let's go to 1 minute. Let's see 1 hour to see 1 hour. See 1 hour here. This is the open range. You see, we got here in 1 hour the fair value gap. We got this one, the fair value gap. Let's see 4 hour. In 4 hour, we expecting the market to climb to go to this liquidity. By the way, that's exactly what we expecting to the market do. Go eat those liquidity, but I don't think it's gonna be right now because 4 hour that's a long swing trade. So we're gonna go for 15 minute. From 15 minute, we will fair value gap to liquidity. From fair value gap to liquidity. That's exactly what we're gonna do. See, liquidity, 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 fair value gap, fair value gap. That's exactly what we're gonna do. So right here, probably this is a potential absentee. Let's minor this one. Okay. Right here, you got potential market structure shift right here. And this can be a potential displacement. There is an order block right here from 1 minute. Let's see in 15 minutes if we got, yeah, we still holding. We're still holding this fair value gap, asset fair value gap, IVG. This one, the big one. Oh, I deleted it? Yeah, right there. We're still holding this fair value gap, IFBG, as a inverter fair value gap. Why? Because he was a selling right here. The market shoot up, doom, 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 doom. Here, close on top of that, even here, close, and he been respecting the middle. Look at the middle, the middle of Fibonacci gap. So we've been respecting using this Fibonacci gap as inverter Fibonacci gap. So right here, I saw the model 22. It didn't work for me because it came and didn't respect this. So now we need a displacement up if we want to buy. But before that, we need an SMT here. So we're gonna see if this is SMT. Let me see it. I'll let you know now. I got the other screen right here. ES doesn't have it. SMT, they doing the same. Let's see. And YM, same thing. So now the market gonna continue going down. The trend is up. Okay, the trend is up. I remember one of my stolos that I have was below here. Yeah, it was below here. So let's see if they made here the placement. One thing that I'm being seen, the microwave being in one place, only one place. Like even he not even move from here. It's just like open range, boom, 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 boom. That's it. It's like crazy market. I don't like it. Literally, I don't like the market today. Being crazy. He give you the example. This supposed to kill all this sell side liquidity for sure. It's kind of tough for this supply side. For example, this displacement right here. I don't like this displacement because it doesn't have S&T, so it can be a potential. Listen to this. You see the market shift right here? It can be a potential, and we got the market shift right here again. So listen to this. We're gonna risk again. I'm trading live with you. We're gonna risk again. If the market close on top of this and create a market short shift, we're gonna wait for the market to pull down to even this fair value gap or the next one if they do one here. Okay, and then we're gonna go to this TP, this TP, or this TP. But like I say, it doesn't have the SMT, and that's why I don't like it. Look at what I like when I'm taking trade. I like this market comp. All right, let's say right here you got the liquidity take. The market do this, do it again, liquidity take, and then here you do the replacement. Right here you got the fair value gap. Then the market shoot up to this liquidity, buy side liquidity, to this buy side liquidity, and to this buy side liquidity. The market shoot strong there. You know what I mean? I don't like when the market has this type of thing because right there, I don't think we got S&T right there. You know what I mean? So market probably can be potential. Just stay there for the rest of the day between this range and this range. And we say, let's say between this high to this low, well, this high to this low, we are in discount. Yeah, because we are below. Let me see, swing. I think it is S&T. There you go. Which is the one I discount. Then to this one. Yeah, right there. So you see, we are in the discount below 50 right here. So the market shoot up here doing the displacement, but it didn't. You see, it's not doing nothing right here. So that's why it's not a good. The market being crazy today, literally, family. The market like being like annoying. Look at all this crazy stuff happening. Man, what's going on? Literally, I'm only risking nothing today. You saw, like literally, he's supposed to. If he eat this liquidity, he did the replacement. He's supposed to respect it and go up for the next one. Nothing. The market didn't make nothing. He been doing this, faking the movement, and then pull back and doing the thing, and pull back and doing the thing, and the pull back. That's like what he been doing. So he playing around a lot today. It's different. Look at the difference between this day today and then um okay, check this right here. Right here, let's say you got SMT. See the market like market coming up, boom, high, low high, low high, low high, low. Right there, let's say this. Even this one, I don't like it because I like when they take out one high, come straight down and take the low quickly. You know what I mean? Example right here. Look at this. He went, took this high completely. Boom. He took it. Went up and shoot down right away. One, two, three, four. Boom. You got it? Then from there, you wait for the market to shift around here. I'm talking too much. That's why I got the indicator here. See market to shift right there? Check how we're going to place another one here in the bottom. You see? So from there, you wait for the market pullback to even the fair value gap, or if you got fair value gap here. There you go. You wait for the market to shift, pull back to this fair value gap, and look what happened. From there, you sell the market. You put it like what? 5 contract. Let's see how much you're gonna have there. Put the stop loss right here on top of this or on top of this fair value gap here. And then you go into the liquidity, which where's the liquidity? You got one here, you got one here, you got another one here. So let's take three. I like threes. So one, no, first one, two, three. So right here. So what is that? Eight. So that's $80. We put 5 contract. Sell. Stop loss in the top. Right here. And you go to the liquidity. You're risking $95 to go to 87. You see? So you got here, boom, 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 boom. What's going to happen? See? That's exactly what we want when the market moves. See? Right there, you protect your trade. Even here, you protect your money. That's exactly what we want. Not the market when he doing the SMT and everything. He doing all kind of movement like crazy. You know, it's kind of tough. Look at where he is now. Market's right there now. See, he did the market, but like I said, I don't have which liquidity this market being taken. Let's say he took this one, this liquidity right here. He took this one. Okay, he doing the displacement, and shoot back up, making market shift. So let's say we're gonna take that trade. We need the trade to come back here to this fair value gap. You see, it doesn't have like a dot, that thing like the dot. That means is hasn't been mitigated. You know what I mean? Hasn't been mitigated. So we wait for the pullback here to touch that. You put your stalls even here, looking for the below the fair value gap, like here. Let me take this value gap away. You wait for the fair value gap here, below this, and then you take a trade to this liquidity, this one, this one. You got more here, a lot here. One, two, three, all that. You know what I mean? And that way, it can be beautiful. You see the market being doing this the whole day. You just pull up, come here, doing this. So I don't see it, the crazy movement in the market. See? I don't see that thing, literally. I don't see it. So normally those pullback, when I have those pullback, this is specific, is from the 15-minute fair value gap right here. So right here, this is a 15-minute fair value gap right here. And if you go to 15-minute, check. If you go 15-minute, here you got what? You got engulfing candle 15-minute, check. Right there. You see the engulfing candle right there? That's exactly what we're looking for. 15-minute fair value gap. Okay, and that's why you got this moment. You see, that's what I told you when you got the market structure shift, and then the market come and mitigate that fair value gap. It turn into dot or little line, like cut lines. That's like what he's doing. Then you take a trade right there, put the stop loss on top, go into the liquidity, and that's the way you're gonna get the thing. But today, literally, the market not doing nothing like that. Here was two to one, from here to here, 2 to 1, which was great. From the 15-minute fair value gap, beautiful on SMT, he went to the fair value gap, which is this one, because here you don't have fair value gap. So you put this trade right here. Stop loss. In this case, you can put stop loss on top of this candle. 21. You can go for 2 to 1. Right there, 2 to 1, 224. So that's 21. We're gonna put in this one for a contract. And then boom, you're in the trade. Let's say we sell it right there. Stop loss on top here. Put this trade right there, $330. See? You got the profit here. But it's beautiful to explain to you when everything aftermath they call it. Do it. You have to do it when the market lie. Literally, that's why I was explaining to you. I was trying to explain to you here the if he respect you, if he didn't respect, I get off. And that's like what I did. I would get off. Right here, you see, and like I say, I don't have a fair value gap here in 15 minutes. Let's see. I don't. I don't take inverter fair value gap in 15 minutes. So that's why I delete it. I don't. I don't do that. You know what I mean? So what we can say from here, the market's supposed to come here, eat those liquidity and all that. But because I know in 4 hour the market is already climbing, the market probably going to be potential finish on top of this line right here or on top of this price 2211. You know what I mean? So that's exactly what it is right now. So in 15 minutes we got another swing trade. The trade already passed right here. After this fair value gap right here being mitigated, this one specific, in 1 minute we got the trade, and this was the trade for the day, right here. This was the trade for the day. Okay, so I explained to you the entry for the day. You can take what normally we practice is taking candlestick pattern. Some right here, it looked like engulfing candle, but let's put this one. This is a hammer right here. It's a hammer because sometimes the price doesn't respect the fair value gap and then it go and shoot up. That's why even here it's a great trade. You know, you wait for this at least one candle with you. It's not engulfing, but this week right here tell you something. You know what I mean? This huge week right here tell you something right there. This one, this baby right here. See? That's why it respects so good the fair value gap right here. Then after that, you got this one. It was a plus 80 or 85% of this candle body. Take the trade right there, put the stop loss on top of the week in this case, and go for the liquidity. Okay. So this is for the trade for today. I think we're done, and the market doing the crazy stuff there. So, family, thank you for being part of Berakah Investment Group, the Big Money Group. Thank you. This is day 13, I think it is. Right now, we are September 23. Thank you. Peace.